Uh, we're going to go ahead and get started with our team meeting. Today we've got Ryan Ivory with Arc Home Mortgages online with us. He's going to talk to us about interest rates, which is a pretty popular topic considering rates are starting to increase or have been increasing recently. And with the tight market we're in, definitely not doing any favors to our buyers. So Ryan's going to give us a little bit of information on that. Just a couple of things I've been sending out. I sent out 2 emails already this week as far as news and notes goes. The only thing I was going to mention, trying to read my handwriting real quick. If you haven't paid your dues, make sure you do that. We've got a couple of dates left on our Cannonballer Suite. If you're looking to do any kind of agent appreciation event, let me know. Our Raleigh office is going to be doing a locker room. It's through the locker room free real estate coaching session on June 30th. That'll be in the Raleigh office. If you are interested, let me know. Don't have details yet, but Matt Bergevin of the Raleigh office is supposed to be getting us details. And that's pretty much all I wanted to cover. I did see Matthew Young on here. Matthew, you got a second? You want to talk to us?
Yes, sir. Give me 1 second.
All right.
Perfect. Thank you. I was just coming from a couple of CE classes. Good morning. How are you, sir?
Great. How you doing?
I'm doing pretty good. Wanted to talk to you guys really quickly. Of course, Matthew Young. I'm with Geico Insurance. I do home and auto insurance and pretty much anything you guys sell. Wanted to talk to you about some trends in our market. Airbnbs are a hot topic, as is seller possession. When you guys are experiencing either or, definitely want to take a closer look. Your traditional homeowner policy is not the right approach in most applications. So call me. I am available 7 days a week. I will work with agents all over North Carolina, South Carolina, and Virginia. You guys many times have called me in the evenings or weekends or holidays. I'm here for you every day until 10 o'clock. And again, I work all over North Carolina, South Carolina, Virginia. If you need something beyond that, I can refer you out to partners and affiliates elsewhere. Did want to talk to you guys about something that's kind of been cropping up lately, and that is these inflated due diligence amounts. So your due diligence, which can be in the thousands and thousands of dollars, bear in mind that if we can run a claims report via a quote, so we run a quote which includes a claim report early in the process, even before going under DD, we can find out there's been potential claims filed, and therefore if your client would not have to back out and possibly lose their due diligence money. So guys, that's why I would strongly encourage you to not just let your client just fend for themselves when it comes to insurance, but connect them with a partner. And we'd obviously be honored to be that person, to be a resource for you guys, to make sure that we can find out if there's been any claims. If your client has had claims on a home that they're purchasing, but the claims have been mitigated, my understanding that can be considered by some to not be material fact. So guys, be aware that, again, these questions or anything else, happy to help. Be a resource. I would just mention that we write through many different carriers, so we can place pretty much any risk that you guys deal with. That includes short-term rentals, long-term rentals, vacant homes. Again, if you sell it, we likely have a really good solution for you. And we work, again, all over North Carolina and South Carolina, Virginia. So we do have Spanish-speaking staff, just to make sure everybody knows that. But welcome aboard to some new folks that are newer on the call and newer to the firm. I look forward to work with you. Again, service is my hallmark, and I appreciate the opportunity to connect soon. I will post my information in chat just to make sure everybody has that. And if nothing else, guys, I'll catch you soon. I would just ask that you consider, if you do want to make a client introduction, consider a text introduction. Hopefully your clients will call me instead of going online. We had a lender in South Carolina call us last week. The lender had gotten a quote, or the client had gotten a quote. The lender said, "Can you do better?" And we were able to offer the same rate, but our deductible was $5,000, not $15,000 like the other quote they got. So guys, be aware that your involvement is crucial, and look forward to working with you soon. Thanks so much.
Thanks, Matt. Appreciate it, buddy.
Yes, sir.
All right, Ryan, floor is yours, my friend.
Cool, appreciate it. Hi, everybody. I'm Ryan Ivory. For those that don't know me, I am a preferred lender here with Lantern. I've been, man, Chris, you've been doing this for a while now, a couple years. So I've seen obviously the firm grow and continue to add new faces. So if you haven't met me yet, I'd love the opportunity to meet you, say hello sometime soon. But yeah, I just kind of want to get on here. You know, Chris asked me to talk about interest rates, right? A hot topic right now. What's going on in the market? What are we seeing? What's the 30-year fix at currently? Economically, what's going to probably occur? And, you know, just kind of go through it. So its timing's actually pretty good. Today's a big day. You've probably heard of the Fed is meeting, or the Fed are raising rates and all this other stuff. And what does that necessarily mean for the mortgage industry? You know, you're going to hear, you know, if you follow like Yahoo Financial, hear people, oh, they're going to raise it 50 basis points, 75 basis points. That doesn't mean that, you know, we go from a 5.5 to a 6.25 or so on and so forth. So just to give you an idea of kind of a background of what the Fed raising rates economically, what does that mean? How does that impact us? How does that impact your clients? And kind of go through that kind of real quick overview. So when the Fed is raising rates, what that means is if you're a bank and you're lending people money, right? If they have it on their balance sheets and in their own personal vaults, they lend it out. But they also 95% of the time are going to the Federal Reserve, right? The Fed. And the Fed has a cost of loaning money or borrowing money from them. All right. When the Fed raises their rates, what that means is the cost of borrowing money gets more expensive. So with more expensive costs mean more expensive interest rates, mean more expensive for all of our customers. Now, why does the Fed raise interest rates? They raise really interest rates for one reason, and it's inflation, right? There's a lot of liquidity in the market currently today. You're seeing that, I'm sure, through a lot of companies, a lot of people buying cash homes, kind of gobbling up those lower priced homes for investment properties and so forth, right? There's a lot of capital being spent. The problem is you know, as there's more money being spent, there's got to be a fine line. So they're fighting the inflation that we currently have, which is one of the worst inflated markets that we've ever seen. So this is like the first time in a long time the Fed is actually raising rates, and they're coming out today and they will raise rates for like twice in 2 months. So it's scary. As far as in my industry, right? Because, you know, 2 months ago we were in the, you know, low fours, and now all of a sudden I just looked up my 30-year fix for today, and it's realistically without any price adjustments. Obviously, it's a loaded question, but you're looking at close to the high fives now. You know, 5.75 is pretty much my par rate without any adjustments. Now, for those that know me, I give quite a bit of price reduction and I save your clients quite a bit of money. I see Jessica out there. I'm sure she could attest to that. You know, we had a loan estimate she sent me yesterday, and I was, I don't know, almost a 0.5% better, and the cost was the same, and the loan was actually $35,000 more than what they could approve her at. So interest rates are going to go up. They're going to continue to go up. Today will be this afternoon when the Fed comes out and say what they're doing. They're probably going to raise the interest rates, you know, another 50 basis points to maybe, if they're really aggressive, 75 basis points, and that will cause the rates to go up. A lot of people will probably tell you that it's baked in the market. We anticipate what the Fed's going to do, so we've already pretty much established that. But one clear-cut indicator for what interest rates are is what we call the 10-year Treasury yield, okay? And I'm going to put this in the chat, and it's just a link to Yahoo Finance. And I want you to look at it and look at, like, basically the last 5 years. we are just about at a 5-year high for interest rates. The 10-year hasn't moved this high in a long time. So, but I want you to see it so you can kind of see, and this is a clear indicator of what the rates are going to be doing. So let me send this now. So I look at this religiously every morning to see, okay, what's going to happen. So when your clients call me and say we're going under contract, maybe I don't have signatures yet, but I know it's all accepted. And I look at the 10-year and I know the 10-year is making a big move up. That means it's not a benefit for your clients. So I'll try to lock them before that market pricing comes in. I look for a lot of new construction, right? So new construction, I have clients that went under contract 2 months ago. All of a sudden, when we quoted them, they were at 3.75, maybe something in that range. And now all of a sudden they're not locked because they're not going to be done until the end of the year. And now their interest rate's 5.65. Right? Can they even afford this house anymore? Knowing what the market's going to do and where it's going is really, really important in our industry in a rising rate environment. Luckily, my boss is a double doctorate in economics from University of Penn, so he's taught me a lot, and he's a pretty sharp guy when it comes to this. So I feel like I'm a little bit ahead of the curve than most people, but this is going to go up until we hit a recession. Right? Maybe it will taper off. I think they'll probably try to keep interest rates around the 6%, 5.5% to 6%. I think they'll try to taper it there. But realistically, if we go in a recession, the Fed will have to make a move, and they will have to lower them. So is it forever? No. But I think, again, if I had a crystal ball, I probably wouldn't be doing what I'm doing today. But if I had to make an educated guess, I would say that's probably what's going to happen. And then what I'm seeing in today's market. So I'm actually working with a lot of buyers, and we're looking into the ARMs, right? Adjustable rate mortgages are now very much prevalent. They've kind of been non-existent for the last 5 years. But now it makes sense, right? So it's all about your customers' goals. Are you going to be in this house for 10 years? Are you going to be in this house for 5 years? Right? Or, why not do a 5-year adjustable rate mortgage if you know you're only going to be there for a couple of years? You get the lowest interest rate and so on and so forth, and it saves you money on the back end. So these are things as a lender. My job is to listen to your clients, what their goals are, and figure out in this crazy market how I can save them the most money and get them in the house that they want to be in. But it's a wild ride, and you want to make sure you have a partner that really knows how to navigate these waters. See, any questions out there? I kind of rambled on around. Probably some people were like, "What is he talking about?" But any questions?
Hey, Ryan, one for me.
Sure.
Where do you see it stopping at?
It's all going to come down to a recession. I do think the Fed, if I had to guess, the Fed has to try to level this out, right? Because as you see on that 10-year yield curve, it is going crazy. Now, I'm a firm believer in graphs. We've seen an inverted yield curve, which basically is a clear-cut sign of a recession is on the way. I think that'll have a massive impact on rates, and they will come down. Do I think it's going to be in the next 6 months? Probably not. But again, it's a guess. You don't really know until. But they have to be cognizant, because they could have a serious housing issue if interest rates keep going up 8-9%. Like these houses, we talked about due diligence periods. I had a client put $300,000 down in a due diligence offer.
Wow.
Talk about a not sleeping at night kind of move.
Yeah.
Right? So, with houses and the way and the people that are paying these prices, 9%, 8%, like it's a totally different ballgame, right? So And we've always heard people say, oh, when I bought my first house, it was 11, 12, 13%. Yes, but your home prices weren't $500,000 for your starter home, right? So I think that has a big impact. And if prices bubble out, then what happens if it, again, am I a pessimist? Maybe in this market, sure. But I think the Fed has a very, very difficult decision to make in the future. So I think they'll try to taper it off. But you never know.
I'm tell us, give us a definition of recession and how the real estate market looking during a recession, because with the growth in this area, I can't imagine people are going to stop moving to this area in a recession. So clarify that for us if you would.
Yeah, I think a recession is more of a people are cognizant of spending their money. Okay, so I agree with you, Chris, in the fact that a recession for me, like, a recession is going to impact other areas much more severely than it will, the greater North Carolina market, especially like the metropolitan areas. But like, a place like New Jersey, where your taxes are $35,000, $40,000 a year for a $900,000 house, people aren't spending money. The housing market will not, people are trying to get out of there. Here, there's such a high demand, but I do think what will happen is there may be, inventory is going to be a huge indication of what happens here. I think, if inventory ticks up, I think the demand will always be there, but I do think prices will have to come down a touch for a recession here. Recession other places could be a 25% impact on the real estate market, depending on where you live. So it's really obviously a broad term for people who just aren't spending money. But again, I could be totally wrong. I thought a recession was going to come a long time ago, right? Typically, a housing market is up and down, right? So you go really high for a while, and then it dips down a little bit, then comes right back up. So it's cyclical. We've been on like a 12-year run here of a pretty good housing market. So same thing on the stock market. If you see the stock market come down a bit, naturally, and it's been, I don't know if you follow it or not, but it's been a rocky ride here in the last couple months. But if that comes down, there's people losing a lot of money. That's a recession, right? So, but that just doesn't, you don't know what kind of recession. It's not a depression, right? It's just people come back down to earth, and the liquidity that was in the market is kind of held a little bit. So, but it's
so it's not necessarily it sounds like doom and gloom, not necessarily. So it's more of a riding of the ship, I guess you would say.
Yeah. I mean, again, no one knows, right? Like if I this is all, this just happens. You see it coming over time. Any global economic decision, right? Say Russia goes nuclear, right? That's going to have an impact, right? Say, any COVID comes back again and hits us hard. Knock on wood, I pray that never happens again, but that has a global impact, right? So there's a lot of factors that you can't factor in. So that's the crazy thing about this world. All I can do is look at charts and see where we're going and see what's happening, and interest rates are going to go up until something big happens. So,
one more question, then I'll shut up. You talk about adjustable rate mortgages. That's one of the issues that got us into 2008, 2009. How is that different now than what we saw then?
There's a lot of rules and regulations now, right? So before, they'd give anyone and their mother a mortgage, right? There's no documenting. There's no, looking in their financial backing. There's no Fannie or Freddie to really look at all these issues. So adjustable rate mortgages are totally, they're good mortgages, and they're more balanced, right? So there's a cap. You can only go up a certain amount. Do I think interest rates are going to stay at this level for a long time? No, I don't. So I don't, if anything, those adjustable rates will come down a little bit. So there's just so many rules and regulations to what we do, right? So you guys may think we're crazy if we're asking for an addendum for something on a contract, or asking your client for tax transcripts and all this stuff that you're like, why? That doesn't make any sense. There's so many rules and guidelines to what we do now that is all put in place so 08, 09 never happens again. A good question.
So that's good information, I think, for our agents, because we hear a lot of chatter about we're going back into a crash. And, you know, one of the things that's brought up is those adjustable rate mortgages. And I think that's good information that we can look at as agents and use and sound like we know what we're talking about, because we do know what we're talking about, instead of spreading a bunch of fear like the general populace has. So
Yeah, no, adjustable rate mortgages are good mortgages. It's just for a different type of goal, in fact, right? So
right.
like you would never, if you were getting a 30-year fix at a 3%, like why would you ever have an adjustable rate? It can only go one way, right? Like it can
Right.
only go up. But now you're in the sixes, and is it a gamble? Sure. But if you're not going to be in that house for that long, it's a pretty easy gamble, right? You pay less, and then you're still going to get out of that home before it adjusts. And even if you're still in that home, it's a gamble. You never know what, but you can always refinance if it's lower, or and so forth. So what we're seeing is the adjustable rates aren't like a massive change. However, like you're not seeing an adjustable rate at 3%. If you are, I'd say take it and run. But a lot of the investors and the people that buy the loans in the secondary markets price these a little higher, knowing that there's a good chance that people will refinance out of these before the adjustment happens. So they've priced them a little bit higher.
Hey, I promise this last question. What about taking out equity like a HELOC? What are rates going up on those as well?
Yeah. I mean, rates are going up all across the board, right? Because it all comes down to borrowing money. Borrowing money is just more expensive now. So HELOCs are going to be more expensive. Now it depends on your HELOC and your terms. I don't do a lot of HELOCs myself. Typically, those are local banks will do those. Cash out refinances are really expensive. I have a cash out guy right now, an investment property, good credit. He's at a 7% interest rate. Cash out investment property is the most expensive loan you can do.
Wow.
Yeah, it's crazy to me, but I mean, that's where it is. And I mean, I'd show you guys a rate sheet so you can see exactly. I'm a very transparent person when it comes to cost of doing business. But you'll see what the rate sheet has done. And I'm just looking at ours today, 30-year fix for a 45-day lock. Your par price is a 5.625. That's with perfect credit. You know, it really doesn't matter if you put 3% down or 60% down. It's still about that 5.625. So I mean, that's a lot different of a conversation than we've had in the past.
So when Jessica buys that oceanfront house, what rate is she looking at on a second home?
She gets it for free. So
Jessica,
I like that idea.
we need to talk after this meeting then.
Yes.
You know, second homes is actually something that's been really, like in previous years, you could do a second home and it was a much smaller adjustment than say an investment property.
Yeah.
You know, Fannie and Freddie came out and said, nope.
Yeah.
Nope, we're not doing that, because what we saw a lot of people doing is saying that they are buying that vacation home down at the beach and it's a second home, but then they're going out and putting it on Airbnb and making tons of money off of it. That's an investment, right? So, but what they're able to do is get better pricing, not required to put 25 or 20% down, only have to put 10% down, and their interest rates were as low as the primary. Fannie and Freddie came and said, put a nix on that. Now, I have other loans in my portfolio for second homes that are priced much better. So you don't get hit with a lot of those point adjustments on second homes. That's a great thing about ARC is we have a lot of programs that aren't Fannie and Freddie. So investment properties with good credit and a big payment down, like I've got interest rates that are far superior than what Fannie and Freddie are offering in conventional loans. Same thing as second homes. You know, we have your bank statement loans. You don't want to even know the interest rate on those bad boys. They're probably 9% right now. So again, you know, that some people, that's their only option. They want to do it. Maybe they don't have the tax returns to show what they're making, but I see it in their bank statements. We can do those kind of things. We have a lot of different programs that we can offer. So I like to say, if I can't do it, no one can, but I'm sure there's always someone out there that'll do something crazy. But yeah, that's pretty much it. One great announcement I'm really looking forward to. I actually have a Lantern member that she was a realtor here that is joining me on my team, and is going to be working with me and working with you guys. And for those that don't know, her name is Kimberly Howell. She's here, I think, but she's going to be joining, I think, in the next couple of days here. And you'll probably see her around as well, around your offices. So, you know, we welcome Kim. We're excited to have her part of the ARC team, and we know she'll be a great asset to all of you agents.
We're a little jealous that you took her, but
I'm sorry.
definitely got a good one. So we're happy
There's-
for both
There was
of them.
other lenders out there that were taking her, so I had to steal her away. So
There you go.
Hey, everybody.
Hey,
It's
Kim.
good to be back. Good to be back connected with Lantern.
We're certainly thankful you are, for sure.
Any other questions?
Can I just jump in here real quick? You know, I've been working with Ryan with ARC for what I think like it's our second year, I think. And
Yeah.
I just have to say that I'm just so beyond blessed. I tell Ryan all the time how blessed I am because they are so phenomenal. He's got an amazing team, his loan processor, everybody, transaction coordinator, whoever he uses, they are phenomenal. Ryan has saved me time, has saved clients' times. There's been certain situations where, let's say somebody comes to me and they're already pre-approved, and I'll have them send Ryan, you know, their loan approval, and then he looks at it and he's like, Jess, I don't even see how this is possible. So there are times where, you know, he's so honest and straightforward and will tell you, yes, I'm going to beat this. And he does. I mean, it blows my mind. And then there's been times too where he's like, let them stay where they're at. So the transparency and the honesty is phenomenal. The communication, I cannot say enough about how he answers telephone calls, my texts, doesn't matter the time. I mean, he's always there. My clients have spoken so highly of him. So we are just very thankful for him. I'm very thankful for his team. I'm so excited that Kim has joined him. And I just want to tell you how much I appreciate you and how grateful I am for you guys.
Oh, Jessica, you make it easy. So we're grateful for you and our partnership and all of you. You know, we couldn't be sitting here talking about this about you and, you know, all of your hard work out there. So thank you to Chris, thank you to Jessica and anyone else that, you know, I've had the privilege of doing business with. But yeah, listen, I got to sleep at night, so I'm not a crooked loan officer, and I've seen many out there, but I'm very honest, and you know, if I can't earn their business, then it's not meant to be. So, but if someone's getting a really good deal, I'm gonna say, you take that and run. That's amazing. I'm jealous. I wish I had that. So, you know, just give us an opportunity. That's all we ask.
Any other questions for Ryan?
Cool.
Well, Ryan, I appreciate that's really, really good information. And if you get anything, I don't know, if you get anything in print, shoot it over my way and we'll share it with the folks or put it on our website or our Facebook page.
Awesome.
Just to try to keep people informed, because it's we're in uncertain times and we're heading for more uncertain times. So we just want everybody to have as much knowledge as possible.
Yeah, and if anyone has questions, I'll put my information in the chat. Call me anytime with questions, concerns. If you just want to say hello, I'm always here to help you in any way. So just let me know.
All right, buddy. We appreciate everything.
Yeah, no problem.
All right, I'll
Thank
let
you.
you go ahead and post your information in the chat, and we'll shut her
Hang on.
down.
Help if I could actually type, huh?
That wasn't a prerequisite, was it?
I'm usually just typing on the numbers, so this whole letters thing has got me all confused. All right, there's my info. That's my cell phone. Call, text me. My email, obviously, send me an email. But happy to help you guys in any way.
All right, buddy. We appreciate it, Ryan.
All right, guys. Thank you.
so much.
Enjoy this
All right,
beautiful
everybody,
day.
have a good day. We'll talk to you later, and I'll be sending out this recording as a link so you can view it again if you've missed anything later on today, probably. All right,
Thank
appreciate
you.
it. Y'all have a good
See ya.
one.